I'm Scarlet. This is ETF IQ, where we focus on the access, risks, and rewards offered by exchange-traded funds. Rotating to value, investors rediscover out-of-favor sectors. That's leading to a bid for energy names and small caps. Banking on the middle, actress Elizabeth Banks tells us why she and State Street believe you're overlooking mid-cap stocks. And silver in the spotlight. Rising demand is driving holdings in silver ETFs to an all-time high. Now, whether you embrace or fear ETFs, there's no getting around their influence. Eric Balchunas, our ETF guru, takes us inside the flows for what it tells us about the broader markets.
Thank you, Scarlett. Yeah, so we talked last week about the return of equities, but it's a little more nuanced than that. If you look at the one-week flows into ETFs, look at who is at the top. It's IWM. It's not SPY this week, right? So a lot of people are being discerning. They're actually seeing value in small caps and in value, right? So here's IWM here. Some of these Vanguard are rebalancing, so I'm going to ignore those because those will come right out. We've got some junk bonds on here. JNK and HYG. Also, that's a value ETF, and that's a value ETF. So, but the small cap to me is the biggest notable action on here. So let's look at small cap ETFs historically to see how these flows fit in. And you can see how big this surge is, look, compared to the rest of the year. We're talking about $6 billion into small caps. If the month ended today, it would be the biggest month in the year, and we still have 2 weeks left. So that's a lot of money into small caps. It's funny, we've talked about Michael Burry and his passive bubble and the pushback on that. But part of his call was that he likes small cap value. Boy, did he nail that call, at least for now. Right after he said it, this is what happened. Let's also look at safe haven ETFs, because I want to find out if this is bearish or bullish. And here we have a chart of our gold plus treasuries plus low vol stocks, right? And people are getting out of those, namely treasuries. So this move to value, Scarlett, in my opinion, isn't necessarily bearish or concerning. It's really, I think, more opportunistic than it is sort of worried about what might happen. I think people are just looking for a good opportunity. All
right, so positioning for the near term then. Let's bring in Shanna Sissel. She's a senior portfolio manager at CLS Investments in Chicago. And here in New York, we welcome back Sarah Ponczak, a cross-asset reporter for Bloomberg News. Shanna, let me start with you because you heard and saw what Eric mentioned about the shift and flows into value and small cap ETFs. What about this shift has surprised you, and how are you positioning right now?
Well, I think what's been surprising for me has been the consistency of it. Last week, when we started to see this shift in leadership to more risk on assets, I thought it was more of a technical correction. If you looked at the flows last week, it just looked like the velocity into some of the more defensive areas of the market had slowed down. But it's been consistent again this week. And so it suggests to me that investors have an appetite for risk again. So you see that through small cap and value and high yield and so on. And for me, that's been a little surprising.
Sarah, we use these labels as shorthand, but what exactly are they shorthand for? It depends on your time frame. What exactly constitutes value these days? Because it's not like it's all cyclicals or all defensives.
Right. So when you think of factors, when you think of quantitative investing, another way to describe it is rules-based investing. So as you see market dynamics shift and change, the rules stay the same, but you have different areas of the market and different stocks that match those rules. So as it stands, a lot of people are thinking about value and pointing to financials and energy, namely because when we saw that rotation last week, I should say, those were the two best performing sectors. However, if you look at the two largest value smart beta ETFs as proxies, so that's Vanguard's VTV, that's iShares IWD. Yes, financials absolutely comes in at number one. It makes up more than 20% of each of those funds. But after that is actually healthcare and staples. After that, the rules switch up, the weightings switch up. So you really have to take that into account when you're thinking of value. I mean, not all value is the same, and you can see the makeup constituencies change over time.
Shanna, it's Eric here. I had fun digging through your 13F, as I do with all ETF strategists. You have 3 value ETFs in your top 5 ETF positions. One's emerging markets, one's developed markets, international, and one's US. You also have Fidelity Value. You got a whole bunch of them. How bullish are you on value, or how satisfied are you that value has come back and you own these?
Well, I would say that we are largely bullish on value, and we have been for some time, much to our detriment, based on how value had performed until recently. We just feel that fundamentals drive the market, and valuations, specifically with value, I mean, obviously, that's the basis for how they're looked at, are just extremely attractive at historic spreads with growth. So we've certainly been having an overweight in that area. And we like international stocks and emerging market stocks because they're even more attractive on a valuation basis than here in the US.
Now, speaking of value and emerging markets, your biggest position is in PXH, which has an average PE of below 10. You also own other EMs, which have not been great, although the picture is improving a little bit here as the trade ties seem to be getting a little bit better. Is it time to get back in?
Well, PXH, and we also have FNDE, which is the Schwab fundamental emerging market. Those are our primary exposures to emerging market. We have things around the edges where we're taking specific tactical bets. It is highly correlated, and we do have quite a bit of beta through those two ETFs to the commodity markets, oil prices as a whole. So they haven't done great, and a lot of the trade war issues have weighed heavily on emerging markets. We've shifted a little bit away from our emerging market overweight, but again, it's still the most attractive, and we do believe that fundamentals drive returns over the long term, so we want to have an overweight to the areas that are most attractive fundamentally.
Okay, so we've got this rotation trade. We've got people moving into some unloved stocks, Sarah, but we've also got a disruption in the plumbing of the financial system. Overnight repo rates shooting up this week. Explain what's going on, whether it's showing up in the ETF space at all.
Right, you described it as the plumbing, and that really is essentially what it is. You're thinking of overnight lending rates. So what happens with repo is typically you have one entity that lends out cash, and that is supposed to be in return for collateral. So when you think of collateral, that's really your safe investments, often treasury bonds. So what happened earlier on in the week was you had this shortage of dollar funding. In turn, you saw repo rates absolutely surge. It was completely unexpected. That pushes up short-term funding costs. Now, you really aren't seeing it anywhere in ETF land. Sure, you did see the effective Fed funds rate settle outside of its preset range, but at this point in time, most investors are saying this is more so technically driven, not really anything to be concerned about.
All right, well, we'll see if that actually has any more fallout later on. Sarah Ponzik, Bloomberg News' cross-asset reporter, and our thanks to Shanna Sissel of CLS Investments as well. Now, coming up, actress, producer, and director Elizabeth Banks joins us. We'll discuss how she teams up with State Street to present a unique way to promote the firm's mid-cap fund. And one ETF that caught our attention this week, the iShares 7 to 10-year Treasury bond ETF, ticker IEF. It's seen recent outflows totaling close to $2.8 billion. One day last week, the fund posted its largest daily outflow since 2014. You can find that chart and all the others we feature on Bloomberg at GTV Go. This is Bloomberg ETF IQ. I'm Scarlet. This is ETF IQ. Let's take you through the ETF life cycle, which has three main stages, and step one is the filing. Brightstone enters the ETF marketplace by registering a LiFi Technology Opportunities ETF under the ticker LiFi. Light Fidelity is a wireless network like Wi-Fi, but uses light instead of radio signals. Step two is the launch. There are now, count them, 6 cannabis-related ETFs on U.S. exchanges. The Global X Cannabis ETF is the newest, making its debut under the ticker POTX, weighting its holdings by market cap and charging 50 basis points. And for some, the final stage is liquidation. The Direction Daily Eurostoxx 50 Bull 3 times shares is closing shop. The 2-year-old EU XL offers triple long daily leverage on the 50 biggest Eurozone companies, but its assets never topped $5 million. It's time to get passive aggressive and track the tensions brewing between active and passive investing. Index funds and ETFs are beating actives when it comes to inflows and cost, and increasingly in marketing too. BlackRock's chief marketing officer defected from BuzzFeed. The biggest pot ETF, MJ, sponsored a UFC fighter. And State Street took it to a new level when it hired actress, producer, and director Elizabeth Banks to promote mid-cap stocks and the firm's MDY fund. I want to welcome State Street's head of Spider America's research, Matt Bartolini, here in studio, and Elizabeth Banks, who joins us by phone. Thank you both for speaking with us. And Matt, let me start with you, because explain the thinking here. Why focus on mid-caps, and what does Elizabeth bring to the table?
Yeah, so my team was doing some research around asset allocation frameworks, and we found some really unique statistics with mid-caps, particularly on the return persistency. We looked on a risk-adjusted basis, both for large caps and small caps, and we looked at assets, and we felt that there was a gap because there wasn't a lot of investment in mid-caps. So how do we get this out to our investors and to our clients in a very digestible and fun way? We didn't want to go the sort of old route with a guy riding a bicycle up a hill with a voiceover talking about challenges. We wanted something that would really take notice. So a dry topic like investing, we felt there was no better way to partner with someone like Elizabeth Banks, a writer, director, and a business owner to get that out to our clients, and so they could share in the insights in a very fun, digestible, and really innovative way.
So Elizabeth, let's turn to you. Explain what your experience with ETFs, if any, prior to State Street entailed. Do you own any ETFs now?
I do now, but it's only because of my work with State Street Global Advisors. And frankly, them bringing me into the fold when it came to mid-caps, which, as Matt is saying, hi, Matt,
Hi, Elizabeth.
don't get as much love as the big boys in the small caps. And also that being introduced through State Street to mid-cap companies like Dunkin', the everyday companies that sort of we use in our everyday lives as Americans and that kind of run our country. And I was not aware really that they grouped together like this and invested in as a group.
Right, you're not the only one. Lots of people aren't aware of mid-caps as a group, and especially their performance. Eric likes to call them that, the Jan Brady of the ETF world, the middle child in the Brady bunch. Since launching in 1995, we checked it, MDY is actually beating SPY and the Russell 2000 by a huge amount. Why don't they get any love with that performance?
There's a structural bias to it. If you think about the two main sort of sets of investors, you have fundamental investors and then you have quantitative academics. Fundamental investors are definitely overlooking them. There's twice as many analysts covering large cap stocks. There's mid caps. And then we did a simple search on SSRN.com, a nice research site, and there was nearly 5 times as many small cap research papers than there were mid caps. So both the fundamental investors and the academic quants overlook and under-research this segment, and that is really a risk to portfolios.
And Elizabeth, you mentioned Dunkin' Donuts. We also saw that you interviewed CEOs of other mid-caps like the New York Times as well. What did you learn about these kinds of companies and what they represent about mid-caps and how they can offer a lot of value to investors?
Well, what's great about those mid-sized companies is that they're large enough that they have, they have a great workforce, they have a great business plan, they're in the marketplace, they have distribution, they're kind of ready to go. They also have a lot of upside, which is amazing. So they have room to grow in the market, which is great. And I found through speaking with their CEOs, it was really interesting just to hear about that size company can really benefit from leaders and leadership that create a corporate culture that is all about like service and customers. And there's just something, they're small enough that they feel mom and pop in a way, like you feel like their values can be represented through the company. They really love getting to know their company, know their customers, their clients, whatever it may be. And they have a real sort of love for what they're doing. I mean, Dunkin' Donuts, like, it was an incredible experience getting to know them. They're not a donut company, they're a drinks company. And it was so interesting to hear, like, they're all about the coffee. I also sat with Sam Adams, the brewery, and to hear about breaking into the beer, the world of beer, which is sort of run by Budweiser and these big, huge companies. These guys are like a fan of microbrews, which is now like a rage across the country, and they were sort of first in that market. So they have a lot of passion about what they're doing, and I felt like it was really fun to feel that passion in the business.
Now, of course, that was the previous campaign. Your campaign this year features some ordinary people, but you also talked to spider experts like Sue Thompson and Matt here. Matt, you tried to show off a little bit. You threw in some financial terms like risk-adjusted returns and the Sharpe ratio. I mean, there was some ad-libbing here in the campaign, and Elizabeth had to take out the air horn.
Yeah, there's actually a lot of material that was on the cutting room floor when I started talking about Sortino ratios, and that was when the air horn was really going full blast, and we had to sort of dial it back. And I think it made for better content when we took that out.
Yeah, the Sortino ratio is not going to cut mustard with Elizabeth. She's not going to tolerate that.
No, part of my job working with State Street, of course, is to make all this financial jargon really relatable to everyday investors like myself. I'm just an everyday investor. And of course, we want to hear what experts like Matt have to say, but we also just want straight talk, easily understood advice, like, hey, you should check out mid-cap.
Right. Elizabeth, final question to you. Did you find any parallels between either the movie business and the investing business?
You know what? Both of them have a lot of jargon, and a lot of it you have to cut through the BS.
Elizabeth Banks, thank you so much. Matt Bartolini of State Street Global as well. We appreciate it. Now, coming up, all that glitters is not gold. Sometimes it's silver. We look at an ETF that tracks the commodity that has shined in 2019. This is ETF IQ on Bloomberg. I'm Scarlet Food. This is ETF IQ. Now, for every ETF that offers exposure to a certain factor or region, there's a slew of other funds promising to do the same. And in recent years, few themes have been less loved than international and value, which may be why it's time to take a closer look now with Alpha Architect's Ryan Carlin. Now, before we get to him, Eric Balchunas is going to give us the drill down into the firm's iVal.
Thank you, Scarlett. Yes, this is the Alpha International Quantitative Value ETF, or as I lovingly call it, the hardcore value. Okay, this is unconstrained, going after just the really cheapest, most beat up stocks out there. Takes the top 10% cheapest, although it does have a little screen to kick out the baddest, worst actors in the group to try to eliminate some value traps. 81 million, pretty sizable for a small indeed ETF. 59 basis points is the fee. Let's look at what it holds essentially. Because you're unconstrained, you're going to go to some places like apparel companies, right? But in a scene like today where value is back, that's what gives the biggest kick, which was going to lead me, oh, by the way, look at this. 10 is the PE. That is very low, as you can see. Now let's compare it with the other bigger value ETFs that typically have constraints in them to try not to make them so volatile, like EFV and IVLU. You can see here the fees, but look at way less holdings here. The PE is way smaller. The companies tend to lean a little smaller, but look at the return over the past month. When it works big. The question is, can you stomach it, Scarlet, during the times when it's not working and the other ones have a little more beta to flatten out the return? So that's really the dilemma investors will have to ask with these ETFs.
Yeah, but that juicy return gets my attention. Now, still with me is Ryan Carlin. He's head of capital markets at Alpha Architect. We've seen the biggest week for value ETFs in terms of flows in months. Ryan, what kind of pickup in interest have you seen for the Alpha Architect brand of deep core value?
Yeah, there's been a pickup. People are interested. Everybody wants to know, is this real? Is this turnaround real? And our answer is, unfortunately, we don't know.
It's an honest answer.
Yeah, and we wish we knew. The one thing we do like to see from value is, well, value's ripping up and momentum was going down. And it's like, why would you want momentum to go down? Well, that's what the back tests look like, right? And everybody's seen a good back test, but just to see that uncorrelation, we actually like to see momentum and value be uncorrelated.
Now, in terms of value, say somebody's interested, what's the case for international over U.S. value right now? Because international does have the edge, but again, there's been some other issues internationally that people are not into.
Yeah, so the argument is, if you tear apart the data, if you look at all the research, value seems to work across countries. So that's important. It works everywhere we can find. It also, there's an argument to be made that things are expensive around the world, right? And you look at the Cape-Shiller ratio or whatever you may want to look at on that, that seems to look like things are expensive. So that's the third thing, or second thing. And if you were going to then pick something, if you believed, hey, this value turns real, well then, as you just showed, our stuff's pure. So if you were gonna take advantage, use a tool to take advantage of it, if you were gonna make that call, we probably wouldn't, but our stuff's the stuff to take advantage of it with. Yeah.
I like the way that you describe that. It's pure. Your stuff is pure. Yep. Now, your funds are hyper-focused on value or momentum, and in one case, a combination of both globally. Eric likes to say momentum is a chameleon because it's made up of whatever's been leading. To what extent is value also a chameleon that is changing as well?
Yeah, what extent is value changing? I mean, it's just hard. It's just really painful. It's going to be terrible for a long time, and then it's going to do well. What sector are you going to be in? That's going to be changing, right? But so yeah, who knows? It's just hard to suffer through the downturns.
And of course, QVAL and the iShares VLUE are both up about 10% in the past month. So it's not limited to the hardcore value ETFs necessarily.
Yeah, no, not at all. And what's interesting about VLUE, which is the bigger one, QVAL has almost no tech. You can see there the differences in sector weights there, yet you're both up. Just explain the wide difference between your fund and the big iShares one.
Yeah, the difference is that there's different ways to slice value, and not all ways that you slice value are the same. We have our way. We use EBIT, earnings before interest, over total enterprise value. iShares uses different methodologies. We think our way is a little bit more reasonable to use, but that's up for debate. Yeah.
And you know, I've seen you guys actually merge. You're an issuer. You're the hardcore quant guys to me.
Yeah.
But you've actually started issuing other people's ETFs like FRDM. Are you turning into a white label issuer? Are you open for people who have an idea?
Yeah, we're open for people who have an idea selectively. You know, we like to partner with people that we fit well with us culturally and you know, we believe in as people and we've known for a while. That's who we prefer to partner with. So the possibility is there, yeah.
Ryan Curlin of Alpha Architect, thank you so much for joining us today.
Thank you.
Now, we talked about momentum. There's been plenty of that for precious metals in the past few months. In this week's There's an ETF for That, we highlight one metal with a lot of thrust behind it.
The iShares Silver Trust has a simple mission: track the price of silver. But SLV is not your standard ETF. That's because it holds about 320 million ounces of the physical metal in vaults. Minus expenses, investors get direct exposure to silver, which has been shining, returning as much as 27% since the start of the second half of 2019, before tailing off of late. Silver is an industrial metal used in autos, semiconductors, and nuclear reactors, but it also benefits from haven demand as global central banks respond to slowing economic growth by cutting interest rates. The so-called poor man's gold has attracted lots of attention. Bloomberg data show that total known holdings in silver ETFs have climbed to an all-time high. SLV has some $7 billion in assets, with an expense ratio of 50 basis points. It gets a green light in the Bloomberg Intelligence traffic light system, with a note for its alternative tax treatment.
We mentioned defensive versus cyclical earlier. Silver is a perfect example of kind of both.
Yeah, it's not totally a precious metal. It's also used in stuff, so it can riff off of the economy, and that's what makes, I think, silver very unique.
Yeah, great positioning there. That does it for ETF IQ. Be sure to catch us each Wednesday at 1 p.m. New York time. This is Bloomberg.